Thanks for checking out ChartGuys.com, home of technical analysis education in both the stock market and cryptocurrency worlds. See the links in the description of this video for more information on our two courses, Entries and Exits on the Fundamentals of Technical Analysis, as well as our new course on Trading Cryptocurrency Strategy. Purchase both and receive a 20% off bundle discount. Thanks for checking us out. Let's get on to the technical analysis. Checking in on SPY, IWM, and QQQ. So not the end of the week that I was anticipating, just in terms of having clarity and direction. When we have multiple inside bars tightening up, you expect a clear break and momentum in that direction. But what we have is the sectors, the financial and the tech sector, pulling in opposite directions, both Thursday and Friday. Thursday, the tech sector held up just fine while the financial sector dumped. Friday, the financial sector saw an oversold hourly bounce while the tech sector pulled back. So if we have both sectors going in opposite directions, we're not going to see significant gains for the bulls nor the bears. It's going to be a tug and war type scenario where we have indecision. So we have this indecision as we head into next week. I am still favoring the bulls overall just because of how close we are in terms of proximity to the all-time high. But we have to be watching for the financial sector weakness, which has been prolonged over the last month plus. And the tech sector just is really doing a good job of holding the market up, but they need to keep doing so. Otherwise, the market is going to lose some momentum and the bears are going to be taking over. So the levels that are important for me right now are resistance, this double top at 247.28 and 247.27, and then the low of Tuesday's dump, 244.95 is a very key support. In terms of breaking that level would tell me that the bears have regained momentum and are back in the driver's seat. Weekly time frame for SPY, inside bar still very healthy, exponential supports. Bollinger Bands are getting tight. Middle Bollinger Band continues to ascend. Upper Bollinger Band curling down a little bit. So an important start to the week just in terms of looking for clarity and direction and looking for both of those sectors to be heading in the same direction to give us that clarity. IWM also seeing some indecision, but holding key support here, 138.58, 138.59, 138.62. So three lows in the past 4 days at the same level. We're struggling at the 50-day moving average resistance, 139.68, and the bulls have to get over that level to try and turn things around here in terms of seeing higher lows and higher highs after a bearish pretty much the entire month of August. Weekly time frame for IWM, backtesting and holding the middle Bollinger Band just barely. 139.08 was that support. So the bulls still holding on, a very clear support on IWM from the lows of last week. And it will be clear if the bears take over by breaking those levels. QQQ on the daily, pulling back. So we have a bit of an equilibrium pattern where we have our low, all-time high, higher low, lower high, and now we have bearish momentum closing at the low of the day on Friday. Key support 143.60, key resistance 145.84. And watching for which direction we break. We're closer to a bear break than we are to a bull break, but we have to see how that action goes on Monday. Weekly time frame still extremely healthy. Inside bar here as well. Upper Bollinger Band curling down here as well. And we have rejected from that upper Bollinger Band twice in the last couple months. So that is an important level to be watching. We're seeing tightening ranges on SPY and QQQs weekly between the middle Bollinger Band support and the upper Bollinger Band resistance. So watching very close on the daily time frame to start this week. Our daily supports for both SPY and QQQ. Low of Tuesday, important levels, and we'll see if the bulls are able to turn things around as that momentum in the tech sector was bearish at the end of the week. Thanks for tuning in. We'll see you tomorrow.